wanna la la la. I wanna la. I wanna la la la. I wanna la. I wanna la.
Welcome back to another episode of JSE Sens'd, where we make sense so you can make sense. This video is not intended and must not be used or taken as financial advice. Our intro is only for creative purposes. JSE Sens'd is strictly for commentary purposes only. If you need educational material, we do have classes. Our WhatsApp number should be in the description box below, or you could also reach out to us via email. For personal recommendations, do the right thing and reach out to an authorized and licensed financial advisor.
The first company we are going to talk about is CAPITEC Bank. If you are watching this from South Africa, I'm very sure that you know CAPITEC Bank with a ticker symbol of CPI. CAPITEC Bank is one of the largest banks in South Africa, and it came in last and dominated the market, right? Yesterday, CAPITEC issued an announcement on SENS that its CEO, GM Fourie, has actually purchased more shares in his name in the company. And a few days before then, I saw an article on Daily Investor on the 5th of July that the CEO himself has donated about 6,522 shares to a company called Room. This company belongs to his daughter. So that transaction has raised some suspicions and criticism. People say maybe he wants to avoid taxes and stuff. But donations of more than 100,000 do attract some taxes, unless if it's a donation to a non-profit organization or maybe your spouse. But if it's anyone else, one of your family members, then if it's more than 100,000, it's going to attract some taxes still. I think around 20%. Remember, you are encouraged to verify the information you find in this video. And again, it also depends where or how much he bought the shares for, because if he made some gains on those shares themselves, they are going to attract capital gains tax. So he can't really avoid taxes in this case. But some people can still argue and say maybe he did that transaction to pay less taxes, or maybe he did that transaction so that his daughter can avoid paying taxes. Because if his daughter received one share for 3,500, for example, and decides to sell those shares and selling each of them for 3,400, then she herself hasn't made any gains on those shares. So she won't be liable for capital gains tax, because it's almost like she bought them at 3,500 and now she's selling them for less than what she got them for. So yeah, there's just no way for him to avoid taxes. But I also think that it's still very early for us to say if this is tax avoidance or whatnot, because we don't know the intentions of the transaction, right? So I think we just need to monitor what's going to come out of the news in the coming days for us to know exactly what this is, because it could just be wealth transfer. It's also raising some criticism in how this company, Room, on social media, it hasn't been active for the past 4 years. So it seems like he made a donation to a dormant company. So why not donate directly to your daughter's names? But like I said, I think it's still pretty early for us to rule out what it is, right? So yesterday, they announced that he bought 1,718 shares for himself. And these shares were worth just over 6 million, right? And not so long ago, CAPITEC also announced that GM Fourie will be retiring on the 18th of July this year. So you will think that maybe when he donated those shares, he wanted to reduce his holding into CAPITEC because he didn't donate everything he had. It was just a portion of his holdings. But now, him buying more shares for himself shows you that maybe it was for another reason. And also, it's just something to note, because when executives and directors in a company are buying the shares of that particular company, it just goes on to show you how much confidence they have in that company, right? If you can remember, in the previous video, we spoke about one company named Foresight experienced a huge sell-off because the executives and directors of the company were actually selling the stock. So in this particular case, an executive is buying the stock to the company that they are managing. It shows you the confidence that he has in the company. So at the time of making this video, CAPITEC's share price was just over 3,500 per share, with an all-time high of 3,585. So it's pretty much still trading around the all-time high. And they released their results not so long ago, and they were pretty robust, right? So I think it's not even worth asking whether CAPITEC can print a new all-time high, since their results were robust. The executives are buying into the company at that price that it's trading at, and it's currently trading just around the all-time high. It didn't have any dramatic pullbacks yet. So yeah, what do you think about CAPITEC? Do you think it's worth buying around 3,000 something for one share, or do you think we are going to get a dramatic pullback soon so that new investors can hop in? The second company we are going to talk about is Premier Group Limited, with a ticker symbol PMR. So Premier, yesterday, 10 June 2025, has announced and released their group financial results for the year, and announced that they have a cash dividend declaration. So going through the announcement, Premier has posted stellar results, just beautiful across the board. The earnings per share, the headline earnings per share, the EBITDA, earnings before interest, taxes, depreciation, amortization, and the revenue have all increased compared to the previous financial year, right? And if you don't know Premier Group, then I'm very sure you know one of their brands, or two, or three. So Premier are home to Snowflake, Iwisa, Manhattan Suites, Blue Ribbon, Super Sun, Mr. Sweet, Crown Select, Dove, Cotton, Lillet, Nyala Maheu, and way more. I'm sure you know several brands that I've just called out there. And I also have a couple of them in my cupboard, but I don't have shares at Premier. So yeah, it makes me feel like, okay, maybe I need to give Premier a more comprehensive research and look into it with a much more careful eye, considering their results as well. So yeah, Premier has exceptional money management, and they have a net debt leverage of 0.7x. Theoretically speaking, if we ignore interest and taxes and other expenses, theoretically speaking, with a net debt leverage of 0.7x, you can take that 0.7x and multiply it by 12, 12 representing 12 months. This means Premier can actually pay off their debts in just 9 months, their net debt, using their EBITDA. That's exceptional. That's beautiful. They have exceptional money management. So the current share price for Premier is currently 137.51 cents per share. At the time of making this video, of course, it might have changed by now, but not with so much. And Premier actually have an all-time high of 141 rands per share. So if it's currently trading around 137 and it has an all-time high of 141, it means Premier is also trading much around its all-time high. It's not so far off. So PMR can definitely print a new all-time high, considering their stellar performance and the fact that they're not so far off, much like the one we just spoke about, CAPITEC. They're not trading so far off from their ATH. So considering their stellar performance, then I personally believe they can print a new ATH. And this is the dividend they declared. They declared about 2.71 cents per share. And if you look at Premier's dividends, they have been increasing for the past 5 years. So they haven't paid the same amount or less. For the past 5 years until now, Premier's dividends have been increasing. So that's a good dividend yielding company. Well done, Premier. Well done. So the third company we are going to talk about is Assura PLC. Assura is not a South African company. It was incorporated in England and Wales. It's also listed on the London Stock Exchange, but it posts announcements on SENS because it's also listed on the JSE. So Assura's ticker symbol is AHR. And today, 11th of June, Assura released an announcement because they have decided to sell their company to one of the companies that gave them an offer. So Assura has received offers from 2 different companies and they were evaluating them both. So they finally decided that they're going to go with a company called Sana Bidco. So if you don't know, you can actually trade a company being taken over, right? Usually when they take it over, it gets delisted off the JSE. They delist it, but sometimes it's possible where maybe there's a merger. It could be bought by another company, but it could still remain listed, or it could just change a name or whatever. But in the case of Assura, they're going to buy it and it's going to be delisted off the London Exchange, off the JSE, to be a private company, right? So yeah, you can actually trade a company like that, because usually when they want to take over a company, when they are buying shareholders out, they are offering a little bit more than what the shares are currently worth, more than the share price. This is something that I actually did in my own personal experience with World, right? World also came out and they announced that there's a company that wants to buy the shareholders out, and the company offered 120 rands per share. So if you watch the first episode of JSE Sen'd, I spoke about World and also took you through the journey of the takeover, right? So that company offered 120 rands per share, and at the time, World was trading around just less than 110 rands per share. But you know what I did? I actually monitored World prices for some time, and lucky me, it went down to 98 rands. And then I put 5,000 rands on World at 98 rands per share. It gave me 51 shares, right? And then I accepted to sell my shares to the new company that wants to buy it. So now that company is going to buy those shares from me at 120 per share. And I bought those shares at 98 rands per share. So I'm going to make, when I made the calculations, I'm going to make something around 6,100 from just the takeover alone. So I was making this example to say it is possible. I also did it to trade a company being taken over. But remember, none of the information that I'm making in this video is financial advice, and I'm not saying you should go and do it because it's very risky. There's a lot of risks involved. So I was just making an example of the transaction that I did in my own personal experience, and I'm not necessarily saying you should go and buy Assura, for example. Because another thing you could also note with Assura, the price that was offered is not so high from the share price that Assura is currently trading from. So yeah, if you try to replicate the same thing I did, you may not be as fortunate as me. So it's very risky. You need to speak to someone who's authorized if you want to make these decisions, or make your thorough research and just trust your own word and not do it because you heard someone on YouTube talk about it. So let's talk about Assura PLC, right? Just to give you a little context, in April this year, a company called Sana Bidco approached Assura, and they made an offer, a cash offer, to say, we want to buy all the shares in this company, meaning we want to buy out your shareholders and acquire this company in April, right? And then in the following month, in May, another company called PHP issued a competing offer to buy Assura, right? And Assura was like, it told the first company, wait a little bit, let's look at the offer that we're receiving from these new guys. And then they evaluated the offer, and then they just put a pause on Sana Bidco, right? And after some time, they decided that they are going to take the first offer because they think the second offer is a bit risky. So yeah, the company PHP that came late was turned down, and Assura has released a statement today to say they want to sell to Sana Bidco. Assura is in the property space, and it was paying out dividends quarterly, meaning in a year you'd be paid out 4 times because there's 4 quarters in a year, right? After every 3 months. So it's in property, and most of its properties, if not all, are hospital properties. They own a lot of hospitals, but they are not a medical company. They're just in the property business. So they agreed to sell to Sana Bidco because they think PHP's offer was not so attractive. So the current price for Assura is currently around 11 rands and 56 cents per share, right? And Sana Bidco has offered to pay a total of 12 rands and 27 cents per share. So you see, it's not really a big difference. If you manage to buy Assura at 11 rands 56 and everything goes well and the takeover really falls through, you're going to get paid 12 rand 27, but it's not a big difference. Even if you make the profits, it's not going to be so much. And besides, there's going to be capital gains taxes in transactions like this. So if the takeover goes well, Assura will be delisted off the JSE, and off the London Stock Exchange to be a private company. It's no longer going to be trading as a publicly listed company. So I don't know if you knew that you can actually trade a delisting company. You can, it's not illegal. If you don't know, then now you do. The fourth company that I'm going to be talking about is Mr. Price, with a ticker symbol MRP. I think Mr. Price doesn't need any introduction. We all familiar with Mr. Price. So Mr. Price has released their annual results, and they also declared some cash dividends, right? Stellar results as well. Beautiful, just beautiful results for Mr. Price. Their revenues have exceeded 40 billion rands for the first time ever. That's some record-breaking results. They've never exceeded 40 billion rands before, but they managed to achieve it in the financial year 2024, right? They have also reported increases in their retail sales and increases in their market share, to a point where they also opened some more stores, more than 180 stores. So now it brings their total stores to over 3,000 stores. 3,000. So Mr. Price is not a small business. It's a big business. It was founded in 1985. It's even older than me, right? And one of its co-founders is actually going to be retiring in August this year. His name is Stuart Cohen. It must be such a dream to be part of the founding team of a company like this and later get to see it soaring without you, like starting a company that will live on long after you are gone in the corporate space. Must be such a dream. I would love to achieve something like that too. So one other thing is that we're not really used to seeing black faces in this space, right? So it made me think about something Mr. Dube, the owner of Galaxy Boy, once said. He said, if companies like Mr. Price, Truworths, TFG can make 40 billion, 30 billion, or even more than 50 billion per year, then surely someone like him can make just 1 billion. I was really inspired by that. That's such a good way to also take inspiration from the industry leaders, right? Like if they can make so much, if they can exceed 40 billion, then he can at least make just 1 billion. And I wish him all the luck in the world. Yeah, I can't wait until one of them actually goes onto the stock market, like Galaxy Boy or Batu or Drip, one of these black-founded clothing companies. That will be such a good thing happening. I would love to witness that. So Mr. Price is currently trading at 227 rands per share, and it has an all-time high of 301 rand per share. It seems as if Mr. Price's share price is scared of something around that 300 per share price, because every time it approaches it, it just has to pull down. I think it did that 3 times by now. It did it firstly in 2015. It went near 300, but it came back. And then also in 2018, it went near 300, and then it came back. And then also in December 2024, it was going so high, it actually touched 301, and then started coming back from then until now. So I don't know what it's going to take for Mr. Price to finally smash the 300 level, but yeah, It's not so far off. I mean, trading at 227 with an all-time high of 301 rand. It's actually not so far off. And I was surprised to see this price. I mean, companies like Premier has so many brands: Snowflake, Iwisa, Supersun, Manhattan Suites, Lillet, but their share price is around 137, and you find a company like Mr. Price trading at 227, so it's more expensive compared to Premier. It's even more expensive compared to certain miners. I know this other gold mining company, DRD Gold, it's still trading less than 30 rands per share. So Mr. Price is not a small business, eh? It's a very, very big business. So what do you think? Do you think we will actually smash the 300 level and sustain above it, considering these stellar results, or kanjani? The fifth and last company we are going to talk about in this video is none other than Telkom, with the ticker symbol TKG, Telkom Group, right? So Telkom has also released their annual results for the year, and they have declared ordinary dividends and special dividends. So usually when you hear that a company has declared special dividends, it's usually because they've sold some of their assets. They usually sell some of their assets and they split that profit they made from that sale with their shareholders by a way of declaring special dividends, right? So Telkom has also posted some stellar results, but I don't know whether the results are good because they've sold off a part of their business, or maybe the strategy to focus on their core operations is really working. Remember, Telkom appointed a new CEO in 2022, but let's get into it. So yeah, Telkom came back from the dead. They had suspended their dividends. So the fact that they came back to paying dividends shows that they are also confident in their recovery. They are seeing something there, because if maybe they thought they needed some more time, I think they were still going to skip this year and maybe bring back dividends in the following year. So the fact that they decided to declare dividends this year shows that they think they have enough free cash flow to sustain them in the near future, right? So now Telkom is eating from their mobile and fiber businesses, because the part of their business that they sold was the tower business and the mast business. A mast is these structures that have antennas at the top. So Telkom had a lot of those. They also have towers. I'm sure you know 1 or 2 Telkom towers. So they sold off that part of their business to focus on the mobile and fiber businesses, which are the businesses that they are now eating from. So Telkom's revenue and EBITDA both increased exceptionally. They have reported a positive free cash flow. Like I said, that's why they declared dividends, because they believe that they have enough free cash flow to sustain them in the near future. So they used the money from selling their tower businesses to lower their debt, and they now have a net debt average of 0.6%. Remember when I was talking about, is it Premier? I think it was Premier. Premier had a net debt average of 0.7x. Telkom has a net debt average of 0.6x. So if you take a net debt average and multiply it by 12, it gives you a theoretical figure there. You can see how long it could take to pay off that debt, provided you are using the EBITDA and you are just ignoring interest for now and taxes and other expenses. Then it's just theoretical. So for Telkom, it could use their EBITDA to pay off their debt in 7 months. That's good. It means they really lowered their debt if they can pay it off in 7 months, right? But remember, it's theoretical. It's not facts. In order to find out how to calculate these things and understand them better, I encourage that you take our classes. That's where we expand a little bit on what's net debt leverage, how to calculate it, EBITDA, how it works, and other formulas, right? So Telkom's current share price is 42.20 Rand per share at the time of making this video, and it has an all-time high of 100 rands, 99.99. It reached this all-time high in June 2019. I think we had a lockdown, yeah? So maybe a lot of people were on their phones, people were buying data, and then Telkom price was going up. But since then, it faced a major sell-off. And guess what? Why? Because it had too much debt. And I think if you look at the first episode, and also if you just look at a lot of companies in general, the biggest reason companies start facing a big sell-off is because of debt. So studying a company's debt levels is a good way to add to your research strategy whenever you are researching one of these companies, because it turns out that whenever a company has too much debt, it scares off shareholders and the price starts nosediving. Telkom also had poor management and asset write-downs, which affected their profits, and then it started selling off like crazy. So in March of 2020, TKG was actually trading at 13 Rand per share. So imagine if you bought it then. Imagine if you bought Telkom shares at 13 Rand per share, because now it had to go up 200% for it to come back to 42 Rand, from 13 Rand to 42 Rand. And the all-time high is at 100 Rand. So imagine if you were lucky enough to buy it at 13 Rand per share, and now you're hoping that it's going to create a new all-time high above 100 Rand. That's crazy gains right there, no? So in January 2022, Telkom appointed a new CEO, and it looks like the guy knows what he's doing, man. I mean, he got in, he decided, okay, you know what, we are going to sell this part of the business, and we are going to keep this one and focus more on it, the mobile business and the fiber business. And now you have these good results. But I think we need to give it one more year to see how it performs. Yeah, he's confident in his tactics and strategies, but personally, I'm convinced that they were just able to post these good results because they sold off that part of their business. So that's how they were able to pay down their debt. But if they don't change something within the company, then they'll end up acquiring more debt eventually, and it might just kill their business. But you know what's the biggest risk? Starlink. Starlink poses the biggest threat than even debt, because if Starlink is really approved in South Africa and somehow people can afford it, because I've heard rumors that it's a bit expensive. I think it costs around 15,000 rands to get all the equipment installed and stuff, and you still have to pay monthly. If we find a way to bring down Starlink prices and it's approved in South Africa, then all these telecoms businesses, Telkom, MTN, Vodacom, Cell-C, hey, they're going to struggle. I think Starlink is posing the biggest risk of them all. So Telkom has declared dividends at 1.63 Rand per share, and from selling their tower businesses, they also declared a special dividend of 98 cents per share on top. So I don't know, man, what do you think? Do you think Telkom is really recovering, or just like me, you think maybe they are doing good now because they just got this cash injection? Because the total that they're expecting from selling these tower businesses amounts to just over 6 billion rands. So what I think is personal, I personally think they are doing well because they got that money. But yeah, with this Starlink threat looming, I don't know what to think of Telkom. You will let me know what you think about it in the comment section. So that's just about it with today's episode of JSE Sens'd. If you made it to this part of the video, thank you for watching. And if you'd like to join our classes, take the WhatsApp number in the description below. If you don't have WhatsApp, our email is also below. You can reach out to us and find out how you can join our classes. So this was yet another good episode of JSE Sens'd, where we make sense make sense so you can make sense.
Atmosphere, blow it in the atmosphere, blow it in the atmosphere. La 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 la. I want it, la la la.
Shot. Feel like looking like a CEO. Looking clean like a